So it's not just it's not good enough to be good. You have to be better than the people that you're competing against.
I can see the whole wide world with these two eyes, and I can be whoever I wanna be, 'cause it's my life.
Hi there, and thanks for tuning in for another episode of Ask Spurrell CPA. Today, as the Edmonton business coach, we're talking about the business plan, analyzing competitors. So analyzing competitors in your business plan. I have Laura here with me again today. Laura, how are you doing today?
Pretty good. Excited for my flag football game tonight.
Flag football. And so, do you have a position at flag football?
I'm both defense and receiver.
Defense and receiver. Okay. And so Laura is the de facto league all-star in flag football. I'm going to translate it straight into that from playing to a league all-star. So things you learn in these videos. So, anyway. So the quote that I have here today, it's a Zig Ziglar quote. And it says, "You were born to win, but to be a winner, you must plan to win, prepare to win, and expect to win." And the statistic that we have here is Industry Canada, suggests us that 15% of all businesses fail in year one, 30% will fail by year two, and by year five, 50% of the businesses that started out will have failed. And the story that we have here are most business owners, they're developing their product and services to be good. However, business is not about being good. Businesses only succeed if the products and services are better than their competitors. So Laura, what are the questions that these business owners should be asking so they can analyze their competitors correctly in that business plan to win?
If your products are good but not better than your competitors, will sales struggle?
Yeah, and that's the thing that we have to, business is not a fourth place participation ribbon sport. It's not even a silver medal sport. It's, there's customers out there and they either buy from you or they buy from their competitors or they don't buy at all. But it's kind of binary. Either they're going to purchase or they're not. So it's not good enough to be good. You have to be better than the people that you're competing against.
Should your business plan analyze your competitors?
Yeah. If you want to beat your competitors, you need to analyze them. The same way that athletes will watch game tape on the other flag football teams. You guys do that in flag football, right? You watch game tape all the time? So maybe not flag football. Maybe the NFL. They watch game tape on the other teams. It's the same thing in business. You need to pay attention to what your competitors are doing to make sure that you're still competitive, to make sure you're staying ahead of the game, to make sure you're delivering a value proposition that's unique to you and different than your competitors. So you need to 100% analyze your business competitors to succeed at business.
Do you do it in the market and risk analyst section after the trends and before risks?
Yeah, I like it then. So I like to have known, what are the trends in the industry first, because it might identify something in that trends that no one else sees coming. Maybe it's a challenge, maybe it's an opportunity, but I want to identify that. And then after that, I want to look at my competitors next. And then I'm going to, flush out what my competitors are doing. And then I'm going to make it full circle and look at the risks, because a lot of the risks are going to deal with how my competitors are doing and what they're doing, because they're generally the ones that can cause me the most problems. Although there's other risks in business, generally the competitors are the biggest risk of all.
How many competitors do you recommend looking at?
I tell people 5. I think you can get a good cross-section for most small businesses if you look at 5 competitors. It's not practical to look at every every competitor you have. I think you look at 5, really.
What do you say to business owners who say their business has no competitors?
I tell them every business has competitors, and it'll happen. It's a natural thing where they say, "Hey, I'm unique. I do things different." But no matter what you're doing, you always have competitors. There's always other things, vying for that value. Let's say you're selling a speedboat, and your speedboat is the fastest speedboat, and it's the only one that can go this speed. What a lot of people don't know is you're not just competing with the other boats, you're competing with trailers. People are either going to buy a trailer to tow behind their truck, or they're going to buy a boat. They're generally not going to buy both this year. So a lot of times they're cross shopping. We have one client who does real specialty fitness studios, and although they're really unique, that same potential client might just go buy a regular gym membership at World Health Club and call it a day. So you're not just because you're unique doesn't mean that you have no competitors. I mean, your competitors might be doing something different, but generally you're vying for similar dollars that are earmarked for similar purposes.
Should you only analyze competitors that are the same size as you?
I don't think so. I think that's a mistake, and a lot of people think that, okay, I'm a business and I have 5 employees, so I'm going to look around and compare myself to the other electrical companies with 5 employees. And I don't think that's the way to go about it, because at the end of the day, the customer might hire someone bigger than you, they might hire someone the same size as you, or they might hire someone smaller than you. So I really think you should get a good cross-section. That's why I say that 5, because you can usually get people who are like the same size as you. What are they doing? Look at the big guys too. What are they doing? Because they're getting a big portion of the market share. I want to know how my differentiation strategies relate to them. And then I also want to look at the small guys, because sometimes the small guys, they don't have the same value proposition. Their service isn't as refined, but maybe they're cheaper. I really want to understand what's going on at every life cycle of these various businesses, because ultimately at the end of the day, the customer could hire any of those companies.
Should you analyze your arch nemesis in this section?
This is like my favorite thing to do in business plans. So I always ask the business owner, who do you want to beat the most? And it might be just a little bit of a cheap motivation tactic, but I think it keeps it a little bit more fun. At the end of the day, in most business you're in, it really probably doesn't matter that much how well one competitor does to the other. A lot of times it's a former employer. They broke off and started their own business, and they used to do that one. But I that's a good thing, and it gets them focused, because it gets them focused on probably why they left that company to begin with, right? What they want to do different. They see someone else doing it this way, and they hate that. It's like, let's flush that out, because that's who you are. That speaks to your values that you have and the value proposition you're going to have to the customers. I think that it's a super useful thing to do, because it gives you that polarizing outlook, and to succeed at business, you can't be the same as everyone. So if you can flush out that arch nemesis, your polarizing values tend to come out that are different than them, and that really flushes out who you should be and how you can differentiate yourself to your customers.
What are some common differentiation factors?
So some of the common differentiation factors that we find are, some people are really focused on, they have unique features or qualities of their service. Maybe one person has a 2-year warranty and no one else has a warranty. They have a certain intellectual property, or they have a certain software that no one else has that makes it easier for the customers to do business with them. So there's those unique features. There can also be, some people are going after very niche customers. You have contractors that are only doing, commercial improvements for medical professionals, different than the contractor who is going to renovate your house. So going after a really niche, part of the market can help for sure. And then there's a number of other things that can differentiate as well. We're talking about branding. Branding is like a big one. Does your brand really set yourself apart? It can be the staff. Do the staff who are working for you have a tremendous amount of experience, or maybe they're rookies? And then the organization itself, which is different than the staff. I always have to point this out to people, is maybe your organization has been around for a decade or 2 decades, and the organization itself, people trust the name and the brand, not just the people that are working there. Maybe there's something that you do that makes the customer experience better, or you have unique payment terms. Those are some of the common differentiation factors that we find.
Should you focus on all of their differentiation strategies or just their strongest?
Yeah, so a lot like, when I tell business owners that give them the differentiation strategy, and I tell them that, pick no more than 3. Let's go to 1 to 3 that we're going to be the best at. When in terms of the competitors, I'm usually even more discerning. It's like, let's figure out the 1, maybe 2 things that they try to be the best at. Let's be really specific, because it doesn't matter what their second and third items are. It just matters what their best one is. And do we have an ability to be better at that one thing that they're focusing on? Or should we do something else in a different location?
Should you then go back to your own differentiation strategies to compare?
Absolutely. So once we've got that list of competitors, we got people who are bigger than us, people the same size as us, people that are smaller than us, and we know the things that they're trying to do be the best at. That one or two things that they're trying to be the best at. First of all, we're going to look at how good they're doing it. Sometimes they're trying to be the best at it, but they're terrible at it. But maybe they are really good at it, and we got to look if they are really good at it. We got to compare it to how we're trying to differentiate ourselves, and can we beat them at it? If we can't beat them at it, let's look at something else. Is there another opportunity in the market, something else as a trend in this market that we can exploit, in an area that we can not just compete in, but we can dominate in because no one else is going after it?
Ideally, do you want to complete or just dominate a certain differentiation style?
Yeah, that's what it always comes down to. I think some are so saturated. There's people doing everything, and you're going to have to compete. At the end of the day, you're always going to have to compete somewhat, because even if you find a trend and you can exploit it for a while, there's going to be competition. But let's not choose the path of the most resisted. Let's find an area that we can really dominate, and we're really focused on being the quickest service provider. Okay, let's go to a location where there are no quick service providers, and let's just be an all-star at that for a while. And then even when people try to come in the market, they try to be as quick as you. They can't do it, right? So that's the ideal scenario, is you find an area, a differentiation strategy that you can exploit in a particular area. That's usually the way to success. So I think that's what we have here today. As always, please hit that like and subscribe button so we can continue to deliver you tips on how to beat the odds at business. And as always, please leave some comments below so we can respond back and use your input for future videos. Thanks very much.